Hi, everybody. Welcome to day 7 of remote learning. All right, today we're going to be talking about different types of insurance. All right, so let's get started. So, first thing, why is it important to have insurance? Well, we have risk, which is a chance of loss from an event that can't entirely be controlled, and these can be managed by your emergency savings, which hopefully you have, and these would be at least 6 months of expenses set aside to cover the cost of unexpected expenses, and insurance, which is something that you can purchase, and it is purchased by a group of people facing a similar risk to protect against larger losses. All right. uh, and like unexpected events, car accidents, if your home has a fire or a flood, or if there's an earthquake, um, if you are robbed, if your car is stolen, or if your house is broken into and things are stolen, these are all things that you can have insurance for. Okay. All right. So, what is an insurance policy? All right, so a insurance policy is a contract between the insurance company and the insured that states that the exact terms of the policy. Uh, Coverage is the risks covered and the amount of money paid for losses under an insurance policy. A policy holder is the person who owns that policy, and a premium is the money paid to purchase the policy. Okay. All right. And this is buying financial security because, well, you will likely get more money paid out to you than the amount you're paying for the insurance. All right, so here's a quick illustration. So there are 100 people in a health insurance group, all right, each with a 1% chance that any one of them can get sick and require $10,000. If each person pays $100 into the pool, they will have collectively the $10,000 to cover the cost of one person who gets sick. So everyone gives up 100, but no one loses that amount, and 99 people don't collect anything, but they have the peace of mind and the important protection against a large loss. All right, and the fact of the matter is that you could be in that group, and you could be the recipient of that money should you need it. Okay, two benefits of insurance. All right. Payments received from an insurance policy, again, far exceed your premiums, as you just saw in that example. You might be paying $100, but your medical bill might be $10,000, which will be a significant benefit to you in the circumstance that you require it. All right. It also provides financial security and peace of mind. And we have several types of insurance that we're going to be discussing today: property insurance, liability insurance, health insurance, long term care, disability insurance, and life insurance. All right. And the best outcome is obviously to have insurance, but never need to collect on it because, well, that way you have the peace of mind, you have that safety net, but obviously you don't want the massive inconvenience that comes with this. All right, and then we have this insurance process where the event occurs resulting in a loss. The policyholder will make a claim to your insurance organization, all right, which is a formal request asking for the payment when the accident, illness, or injury that's covered by this insurance policy occurs. The insurance organization determine if the event is covered by your policy. If that is the case, then the policyholder, pays a deductible, which is some smaller amount of money to cover the remaining costs attributed to the loss, and whatever's left is uh, paid by coinsurance, which could be a fixed percentage of the loss, and everything else is good. All right. why do insurance policies include this deductible and co-insurance? You might say, hey, wait a minute, I'm already paying X amount of dollars a month. Why isn't it just covered outright? Well, see, the problem with insurance that people found is that uh, if you have insurance, this increases the likelihood that the event you are insured for occurs, such as if you insure your car or some other piece of property against theft, you are more likely to be careless with it because you might think, you know, why does it matter? I have this insurance policy on it. Worst case scenario, someone else gets to pay out this loss, not me. And this way, there's still some burden of loss on the policyholder so that they are still careful with their things. Okay, because insurance isn't supposed to make you richer for having lost something, right? It's just supposed to make up for that loss. All right, so we have several different sources of insurance. In most cases, you'll get it from a bunch of different places. You can get it yourself, where you can just buy long-term care, property, and liability insurance. You can get it from your employer, which is where you can get health, disability, and occasionally life insurance, depending on where you're employed. And from the government, which has special programs for those who qualify and during catastrophes, uh, you know, such as natural disasters or pandemics, things like that. All right, and all of these things can be acquired individually if they're not provided by your employer. All right, so employer provided insurance is considered an employee benefit. So that they add extra value beyond your earned wages. This should be a refresher. The employer, this is in-kind income, the donation of a product or service instead of cash. And for the employee, this is a payroll deduction. All right. So policies may be available to your family members as well. A lot of the times you can, extend that to them. And no income taxes are paid on in-kind income, which is fantastic because that means you're getting this service without having to pay, you know, whatever percentage of tax on them. Typically, it's a pretty good setup to have there. All right, government programs. These provide basic insurance as part of the social safety net to protect citizens from economic hardship. Things like Social Security, Medicare, and Medicaid. All right, many programs require work history and an employer provided participation to be eligible, uh, such as unemployment insurance and workers' comp. All right, so like for you to collect on unemployment insurance, you need to have had a work history, right? You had to show that you were working and then you became unemployed, uh, you know, out of your power. It wasn't something that you did to become unemployed. You didn't like start stealing from the company. And workers' comp, of course, you need to have been working and then injured on the job. All right, and it could also, as I mentioned, natural disasters. It can address specific catastrophe. That the government was able to help a lot of people on the East Coast that were affected by Hurricane Sandy. All right, I know that actually. I was pretty badly banged up from that. All right, so health insurance. Let's talk about this. This will be that first section in the table. All right, provides the money to pay for healthcare, which is often provided by your employer and or the government, and or you can buy it by yourself. All right, what does this cover? Visits, hospital bills, medical procedures, mental health treatment, vision care, preventative care, dental care, and prescription medication. All right, and if you are like if you are not getting a lot of income, it's actually incredibly important to have health insurance because a lot of the times these medical bills that you might have to deal with if you get sick are quite high, and you won't be able to pay that out of pocket. And so, an insurance policy holding one of those would be much better because if you get hit with a high medical bill, they'll take the brunt of that. All right. If you cannot work or live independently, that's where you can get disability or long-term care insurance. Disability care is, payment to replace earnings when you cannot work due to illness or injury. And this is usually provided by employers, though you can get this individually or through the government, if it's a workers' comp situation. And long-term care insurance, this is nursing care when you can't live independently, typically if you are a senior in age, but that you don't need to be hospitalized because you're not like sick necessarily. You might not just be fully mobile, or you might not have access to more basic things, like you might not be able to move around very easily because of your mobility situation. And this is provided by individuals. Typically you could purchase this. All right, these are important to have in case that either of these two things happen to you, of course. you know Then there's property and liability insurance. Property insurance is paid to the person who owns the policy if your property is damaged or destroyed by an accident. All right. And liability insurance is payment to others if the member of the insured policy accidentally causes harm to other people or their property. All right. In fact, your car insurance, if you ever get a car, that is liability insurance, not property insurance. Or it could be both. But like in the instance that you hit someone, your insurance policy will pay out to them the damages on their vehicle or on their person. So that's the difference. Property insurance, it insures your own property. Liability insurance protects you from the financial burden should you cause injury or harm to another person or their property. And again, this is typically provided by individuals. You'd buy it from Geico, State Farm, Allstate, etc. All right, so as I mentioned, automobile insurance, payment for liability and property insurance on the vehicle. Homeowners insurance, cover liability losses and damage loss for the structure and its contents. And renters insurance, which is the same as homeowners insurance, but for a rental unit. All right. Uh, and that's actually why it's required to have automobile insurance if you are driving an automobile, because a lot of people uh, don't have the amount of money required to pay out a an injury or property damage suit should an automobile accident occur. And the people who are injured require that money for their medical bills or for the repairs to their vehicle, and that's why it's required by law to have this liability insurance so that everyone on the road is protected in that way. Then there's life insurance, which is payment to the policyholder. To the person named by the policyholder should the insured person die. That person is called the beneficiary. That's the person who receives the money if the insured person dies. And a dependent is someone who relies on someone else for income or care. All right, this is usually provided by either the employers or an individual can purchase it themselves. It may cover paid and unpaid work formerly done by the individual. So people typically get this if they are the sole income of a household, and they worry that if something happens to them, what's going to happen to my family? They can get life insurance, and you can get a policy that says, hey, in the unlikely case that I perish, you will continue to pay the income for my family to survive, and it'll typically match closely to what the policyholder originally produced. All right, and household production is the unpaid work, such as childcare and meal preparation. And so this would be necessary again if you do a dangerous job. Perhaps you're working in you know field maintenance on generators, right? Or, you know, on transformers, and you're up and you're dealing with electricity and you're dealing with fragile parts, and maybe, something goes wrong, you get electrocuted, you're out. You know, this can protect your family. There are a lot of dangerous jobs that people do. Life insurance is a very good thing to have. All right, there we go. Hopefully this was nice and quick. Let's do a quick review. Uh, Insurance is an important part of your financial plan. It is intended to help you in the case of a loss, but not to be a benefit if something does happen. It's just supposed to be a safety net. It's not supposed to be a way up. Because if you use insurance for a way up, you're most likely participating in fraud, which we just talked about. You don't want to do that. Um, you can acquire it from multiple different sources. Either you buy it yourself, you can get it from your employer, you can get it from the government. Even with insurance, you should still have funds to pay your deductibles and co-insurance, because again, they want to make sure that uh, you know people are incentivized not to need it. And there are several types of insurances for specific purposes that we just talked about. And let's just do a few quick examples. So, for example, you're having a baby and you need medical care. What kind of insurance would you need to have there? That would be health insurance. All right, next. You are unable to work for 6 months and need help paying your expenses while you are out of work. What insurance would be required there? You can pause, think about it. Disability insurance. You are elderly and need assistance from medical professionals to continue living at home. What, what kind of insurance would this be covered by? Long-term care insurance. Your home is destroyed by a tornado and you need to rebuild. What kind of insurance would this be covered by? Property insurance, specifically homeowners insurance. The car you were driving causes accident that injures someone else. All right. What kind of policy would you need to have for this? Liability insurance, specifically automobile insurance. And last one, a sudden death of a family member results in loss of income to the household. What kind of insurance policy would be helpful for this? Life insurance. All right, everyone. So please make sure that you get the notes in the Google Classroom. That should everything that we covered today in these slides in this video should help you finish those notes. And I'll see you tomorrow. Oh, also, if you're one of the two people that haven't joined the Discord, just join it. You'll see the link right after this or down in the description. All right, guys. Bye.